Hello and a very good morning to everyone. So just a quick recap of what we've seen this morning and overnight as well. And it has been a pretty risk-averse tone, and that's really from the reports that we saw over the weekend, notably that further Spanish regions may require state aid. So that follows on from the Spanish region Valencia on Friday. They officially requested aid to repay their debts. And we've also seen a report suggesting the IMF is reluctant to lend further to Greece. Now, the Troika are due in Athens as of tomorrow. Reports and a conclusion of that review are due at the beginning of September. So that'll be when markets really look for any sort of decisive action and if Greece do need a further injection of capital. But in terms of that Spanish story, that has weighed quite a bit on European equity markets. Financials are worst performing. And also we've seen quite a big turn in terms of fixed income markets. The Bund opened significantly higher today, and that's just as speculation grows that Spain may need a bailout for the country as a whole, as opposed to just their banking sector, as the states do weigh on risk appetite. Now, as well as that, we have had speculation that Italian cities may need state aid, so all this just adding to a bit of negative sentiment, and also just driving crude markets lower. So crude futures ahead of the NYMEX pit open, they're down around $3 so far in today's session. We've also seen a bit of downside in terms of the Euribor strip, and that's as short sterling and Eurodollar have been slightly bid at the open. And that move in Eurodollar, or Euribor, excuse me, that's just on the back of speculation of increased interbank lending with the struggling financial sector. Now, looking ahead, it looks to be relatively quiet. We have some earnings out of the US pre-market. The only bit of data out of the US really is the Chicago Fed number. So for the time being, that's enough from me. We hope you have a very pleasant afternoon, and we'll have a little wrap up for you a bit later on. Thank you.